Hey folks, I sent an email about this already, but since then I've gotten a lot of questions on this. This fee changes business is pretty big news in terms of changes in the investing world, well, in the UK at least. And judging from the thumbnails, people have been pretty unhappy. But a lot of people have been asking questions and they've got a bit of the wrong end of the stick, and panicking a little bit too much, or at least more than they should, and I'll explain why. Hello and welcome back to the Dividend Experiment, the channel that helps you build a portfolio that pays your bills. The content discussed is intended for information and educational purposes only, and should not be considered investment advice or recommendation. Whenever you invest, your capital is at risk. In case you weren't aware of the change, let me briefly explain it. Starting from the 31st of January, Vanguard is making a key change to its fees for UK investors. It'll introduce a £4 per month minimum fee, or £48 per year, for those with total investments under $32,000 across its stocks and shares ISA, self-invested personal pension, or SIP, or its general investment account. And this replaces the current 0.15% annual charge for smaller balances. Currently, Vanguard charges a flat 0.15% fee on your total investments. So for example, if you have £10,000 invested, you pay £15 annually under the existing system. However, with this change from January, if your balance is under $32,000, you'll instead pay the new minimum fee of £48 a year, regardless of how much you have invested. So if your balance is above $32,000, nothing changes. The current 0.15% annual fee will apply, capped at £375 per year. So this change has bigger impact on smaller investors. For someone with just £1,000 invested, the new £48 annual fee will effectively cost 4.8% of their portfolio, far higher than the current £1.50 fee under the 0.15% structure. Similarly, an investor with £10,000 currently pays £15 a year, but under the new fee system, they'll pay £48 annually, which is more than triple the cost. Investors with balances over $32,000 will not be affected as the 0.15% charge remains unchanged. For new investors or those with smaller portfolios under $32,000, Vanguard will now be a more expensive option compared to platforms that don't have a minimum fee. If you only invest a small amount, such as £1,000 to £10,000, the £48 annual fee could take a significant bite out of your returns. However, for those planning to grow their investments to larger amounts over time, Vanguard still remains fairly competitive due to its low 0.15% fee for balances over the £32,000 threshold. So what were people getting wrong? The issue I see coming up in questions was this misconception about what Vanguard actually is. To simplify as much as possible, we can divide Vanguard the company into two parts: the ETF provider and the platform to hold your investments. So think of Vanguard as like a Costco-style membership warehouse. The Vanguard platform is like your Costco membership, so you pay a subscription fee, which is now £4 a month, just to access the platform and its services, similar to paying a Costco membership to shop in the store itself. Vanguard ETFs and funds are like the products you buy inside Costco. These products have their own separate price, which is the ongoing charges figure, that you pay when you invest, just like paying for your groceries or items that you'd buy at Costco. The recent changes to Vanguard's fees in the UK only apply to their investment platform, so where you hold accounts like the stocks and shares ISA, self-invested personal pension, the SIP, or a general investment account, and these changes do not affect the fees charged by Vanguard's ETFs, exchange-traded funds, themselves. Here's the key distinction. The platform fees, these are the fees that Vanguard charges for using its investment platform to hold and manage your investments. This is what's changed. The ETF fees, so Vanguard ETFs and funds, come with their own separate charge. This is the annual fee that the fund provider, so in this case Vanguard, charges to cover the cost of managing the ETF. And these fees are typically very low, often 0.05% to 0.25% per year, but that really depends on the fund itself. So let me show you an example of the popular Vanguard fund that tracks the S&P 500, VUSA. As you can see in the image, the fee, labelled as TER or total expense ratio here, is 0.07% to hold the ETF. Importantly, these fund fees remain unchanged and are completely separate from the platform fees. This leads to an interesting scenario. Because there are other platforms that don't charge the £48 to use the platform, and because they also let you hold Vanguard funds, it means that it's cheaper to invest in Vanguard funds on another platform than on Vanguard itself. So for example, Invest Engine, which I've talked about before, is significantly cheaper now, especially if your portfolio size is under $32,000, but even after that point as well. For InvestEngine's DIY portfolio, they don't charge platform fees or dealing fees, meaning that you'd only pay the ETF fund fee. This means that on a £1,000 portfolio, buying the exact same thing, you save the new £48 minimum fee that you'd be paying on Vanguard. So in many cases, the Vanguard users are paying an extra fee to buy the same thing, just because of the brand name. I got an email from InvestEngine saying that they've now sorted their SIP transfers from Vanguard, and they're getting a lot of interest from people moving from Vanguard since Friday, and have even decided to double the welcome offer for anyone wanting to join, and that's for everyone, not just Vanguard users. So that means that you can now get a welcome bonus of up to £100 when you invest at least £100 with InvestEngine. Capital at risk, T's and C's apply. So if you're of the opinion that Vanguard is essentially mugging off investors with the smaller, growing portfolios now, it's a great time to think about switching to pocket the extra bonus to help boost your portfolio even more. But this wasn't meant to be a video about which investment platforms you should be using. I just made it to illustrate that there's a difference between Vanguard the platform and Vanguard the ETF provider, and that the change in fees only applies to the platform. Now, I personally wasn't using Vanguard as a platform before this fee change, and I certainly won't be now, and I'm surprised that so many still do. If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!